I will need to take some lifestyle chips off the table this bull run. And the model I built for profit taking is based on when my profit is 4x. I take a percentage of my profit. Sound theory. What happens if it doesn't get to 4x? That's why I use time and not price, because price leaves you to make potential bad mistakes. Do time. I think it's better. It just forces you to take some chips off the table. I'm going to use somewhere around the end of the year to take some chips off. And I'm assuming price will be higher by then, and therefore I can take some profit.
The 2024-2025 cryptocurrency bull market is in full swing. And like previous bull markets, it's been marked with many ups and downs. The bull market kicked off on a fairly good note earlier this year, with the approval of several spot Bitcoin exchange-traded funds by the US Securities and Exchange Commission. This marked a huge turning point, not just for Bitcoin, the leading cryptocurrency by market cap, but also for the overall crypto and digital asset space. The Bitcoin ETFs have taken in tens of billions of dollars in assets, and the SEC is looking at a September approval for several spot Ethereum ETFs, which experts also expect to be very successful. However, there's been quite a bit of turbulence over the past few weeks, leading many to speculate about the bull market and what lies ahead for crypto asset prices in 2024. As a result of this speculation, it's become more common to see investors asking about the appropriate time to take profits and exit the markets before the next crypto winter begins. For Real Vision founder and CEO Raoul, profit taking is a multifaceted issue that must be appropriately timed to avoid missing what he describes as the best investment opportunity ever given to humanity. Pal believes the best approach to investing in the cryptocurrency industry is having a long-term time horizon and riding the wave during both upside rallies and drawdowns. However, for those who have urgent needs, Pal says time, instead of price expectations, should be your guiding light for determining when to begin taking profits during every cryptocurrency bull market. During a recent live stream on his Raoul the Journeyman YouTube channel, the former Goldman Sachs executive reveals that he will be taking some profits later this year after we hit the much-awaited banana zone to take care of some personal expenditures. For those with no urgent needs, Pal advocates the buy and hold strategy, at least until 2030, when he believes the entire space would have increased exponentially from its current $2.3 trillion market cap to $100 trillion. As we bring you clips from Pal's video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Danny Rogers, what do you recommend withdrawing and reinvesting next crypto winter, or continue to DCA and hold? Danny, I did the DCA and hold, and I was at all-time highs in my P&L much earlier because of it. I think if you take, let's say you've grown your bag from unit 1 to unit 5, and let's say you're a superhero, you get out at the top, you will not invest unit 5 down. What happens if the market doesn't go down 70%? What happens if it goes down 40 this time because of the institutions? And you're stuck, and then the market's going up, and then you put in 1, and then before you know it, you've the whole thing up. It's so easy to screw it up because you're in psychology. So what I really like to do is, if I can, I'll leave it all in. I won't this time because I want to take some lifestyle chips. I've got some things I want to do. But other than that, I'll keep the rest in. I don't know what else I want to buy. And I just think of the sell-offs as a gift. We have to change our heads around sell-off bad. You've got to think sell-off good. Now, that doesn't mean that's for everybody. You should think, what do I need out of this? And I'll take what I can from that. And then I will continue with the rest. If you're 24 years old or whatever, just stay in, for God's sake, and keep buying. I don't think anything changes.
Raoul Pal's buy and hold strategy is quite different from Plan B's approach about timing the market around the Bitcoin halving. According to the anonymous analyst and former institutional investor, it's been established that buying 6 months before the halving and selling 18 months after might be a better strategy than buying and holding. A post he made on Twitter earlier this year reads, "All Bitcoin price increases have been around halvings. If you bought Bitcoin 6 months before each halving and sold 18 months after each halving, then you would have 4 Bitcoin instead of 1 Bitcoin with buy and hold. Is this spurious coincidence or pattern signal, and will it continue? When a Twitter user notes that trying to time the markets might be risky, Plan B replies with, "Trying to avoid the worst of minus 80% bear markets after face-melting bull markets is more like risk and liquidity management than timing the market to me." In another tweet, Plan B revealed that timing the market around the halving is a major part of his stock-to-flow model. The tweet reads, "Stock-to-flow model simplified. All Bitcoin gain and more has been around halvings. Green line, buy 6 months before halving, sell 18 months after. Red line, buy 18 months after halving, sell 6 months before. Blue line, green line plus red line equals buy and hold Bitcoin." In a follow-up post, the pseudonymous analyst added, "This is not a recommendation to sell 18 months after a halving. This is just to show how interesting it is that all Bitcoin gain is around halvings, that halvings seem to be important, and indeed, that the stock-to-flow hypothesis holds." Which do you think is the better strategy? Sticking through during bull and bear markets, or trying to time the markets to exit at the top and get back in as it bottoms? Let us know your thoughts as we bring you clips from Pal's recent interview with Kevin Follonier, the host of When Shift Happens.
Don't leave the space. If you do it for lifestyle. What's really hard, what I've learned is, I've gone through this before because I've been involved in this space for a very long time. I've held through cycles, I've traded cycles, and I've figured out if I just held my original bet, which was much smaller, I would have been 5 times better off. If I'd have just added every time we had a bear market and assumed I missed the bear market low by 30 or 40%, I'd made 25 times as much money. So this time around, I added furiously between June and October. In fact, those 2 dates in 2022. And I was at all-time highs in my P&L well before markets were. That's what it means when you compound. And just do that one thing and it'll change your life. But most people can't. They've been taught that the drawdown is a terrible thing. But if you're not going to take the money out and you don't need it for school fees or the house, don't take the money out. The other thing is, let's say you've turned your 10 grand and it's now worth 250 grand. Okay, when you take it out, let's say you're a genius, you get the high, the market falls 90%, you will not put the same amount of money back because you have that mindset that you had with Solana. There's no I go to zero, right? That is so pervasive that you will only put a smaller bet in. You can't do it. And people think they can. Oh, I'll just take my 250 grand and then I'll just buy it at the bottom and I'm going to be the richest person in the world. No, won't happen that way. Yeah. But I've seen the power of this thing. My sister-in-law, she had a 401k and it was in 2020. She's like, what do I do with this? It doesn't go anywhere. And I'm like, just put it all in crypto. She did. And now suddenly she's got a really quite decent sum of money for her. I mean, several times her annual salary now in this. That's amazing. I was speaking to somebody who used to work at Real Vision and she just dropped in, how much money her and her husband had made. I mean, he was a science teacher and they had made really quite a lot of money, in ordinary person terms. I'm like, you can understand why people become obsessed because it belittles everything you've ever done beforehand, all the work you've ever done. And then you start thinking of it all of how much work can I do to put money into this bet because it's the best bet of all time.
Pal's exponential age thesis revolves around rapid technological advancements, particularly in the fields of robotics and artificial intelligence. He argues that the world's severe debt problem is exacerbated by an aging population and declining productivity, making it impossible to absorb the massive debt load naturally. However, Pal sees AI and robotics as game changers, which could fundamentally alter the GDP equation by introducing virtually limitless productive units and exponentially boosting productivity. AI will scale knowledge infinitely, while robotics will do the same for physical work. Pal believes this productivity surge will resolve the debt crisis and significantly drive GDP growth, preventing a global collapse. By 2030, he predicts, the world will be transformed beyond recognition, reshaping our understanding of economics, finance, and investing. Therefore, he urges investors to seize the tremendous opportunities in the cryptocurrency market now. before the landscape changes entirely by 2030. In addition, regardless of whether you're selling later this year, 18 months after the halving, around October 2025, or in 6 years, there is no denying the immense opportunities the digital asset space presents. Let us know your preferred strategy, as well as comments on Raoul Pal's interview and Plan B's tweets. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.